Hello, this is Joe Pryor of the virtualrealestateteam.com in Oklahoma City. One thing that I've not really talked about in a long time, I think, is what's called a 1031 tax deferred exchange. So this is going to be to investors in terms of who I'm speaking to. And the reason why I want to bring this up is I am getting a tremendous amount of people doing 1031 exchanges into Oklahoma City and selling property they have in Las Vegas, in Phoenix, in Atlanta, California. The reason why they're doing this is very strong reasons. Is number one, they were able to kind of keep their properties through the meltdown starting in 2007. In other words, they may have had a 50% drop in their values, but maybe the rents were still there. Maybe they had reserves, and so they were able to hang on. And so what they've been waiting for is a return to value so that they could sell their homes. And this is happening right now, especially in Phoenix, where rents are down and vacancy is up because there's just, again, too much rental property in Phoenix. But selling the home is really, really strong. So what happens if you sell your home and all of a sudden you've got $70,000 in terms of net proceeds? If you want, you can just take that money home. The only problem is that you're going to be taxed fairly heavily on that profit. You're going to be taxed, first of all, on what's called a recapture tax. You know, you take the improvement in the property, you divide it essentially by 27.5 years, and that's your depreciation schedule. But if you sell it and cash out, you got to pay 25% of that back. And then you take that off what we call our basis, which is a whole nother discussion. And then let's say at that point there's $50,000 left out of that $70,000 because of the recapture tax. And then now you pay capital gains tax upon that, on top of that. Well, there's a thing called, it was originally called a Starker exchange. It's one of the few times there was a successful lawsuit against the IRS where just a humble individual won, not a major corporation. And it allowed us to take that $70,000, reinvest it in more property, and have the ability to not pay any taxes. And one of the things about this is that the IRS put some restrictions on it. Number one, once you close, let's say you close it December 1st, you've got 45 days to identify what you want to buy. So in other words, up until about January 15th, you've got to give them the addresses and prices of things that you're going to purchase. And that has to be recorded. And then the second thing is you've got 6 months to close it from that closing date, which normally, of course, you're going to close maybe just right after the 45 days, maybe 90 days down the road. And if you do that, that money can be reinvested. Now, there are certain rules about that. For instance, you could take that $70,000, you could divide it by two and buy two properties and devote $35,000, or you could divide it unequally, however you want to divide it. Or if you had $200,000, or in the case of a recent investor out of California, $890,000. And as long as you invest all of your cash, you can avoid taxes and you can buy multiple properties. That builds your cash flow even larger. It's a fantastic thing for you to do if you're trying to build wealth, a passive income, so that you have security for the future. So a 1031 tax deferred exchange is a wonderful thing to do. You can buy as many properties as you want, as long as you don't go 200% over whatever the amount of money that you're trying to invest. So that particular gentleman could invest in about almost $2 million worth of property. But as long as you invest the cash, as long as you invest at least what you have, then you can avoid those taxes and you can buy more property. Now, there's some other details about a 1031 that I don't have time to go into. I want to give you the basics, and it's a way for you to buy anywhere you want in terms of what's called a like-kind exchange. I'll explain that more when we talk what a like-kind exchange is. But if you're an investor and Oklahoma is one of the stable markets and you want stability and you want to get out of the bubble markets, talk to us about buying property on a 1031 tax-deferred exchange. This is Joe Pryor of the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.